the stimulus plans, there's, we didn't actually expect from a valuation model, how do you value Bitcoin and other cryptocurrencies? We didn't expect the pandemic to create, even a third stimulus coming, right? So what's happening is there's so much money being printed that there's a lot of excess money as well. And that excess money does go back to the stock market. It does go back to other investments here. So what we're seeing now is like with low interest rates, you see like the stock market at all-time highs. You see cryptocurrencies at all-time highs. You see real estate like the fastest buying growth in 6 years, right? So what's happening with crypto is like there's nowhere else to invest money right now. But within subsets of crypto, there are ecosystems that are still, I wouldn't say undervalued, I'd say like superheated, but there's still yield coming from these ecosystems that are being built on cryptocurrencies right now. And that's what like kind of our research and our kind of predictions are heading towards in the cryptocurrency area.
I started off years ago saying cash is trash, and it's becoming trash. The more that artificial intelligence and technology makes things more efficient, prices should keep coming down, but the Fed keeps pumping it up. And so we have the guys in the middle, the people that, lesson number one in Rich Dad Poor Dad is rich don't work for money. Because the moment you do that, you're screwed. So it's coming true right now. It really deeply concerns me, especially now that I'm going, oh my God, what I was saying 25 years ago is coming true today. And so that's why people have got to understand what goes on in your head, because that's the future now. The future of money lies in my opinion, crypto or Bitcoin and blockchain.
Just a quick summary to like first-time listeners, Bitcoin is a decentralized ledger. You can think of like an Excel sheet that nobody actually owns, but everybody that has like a cell, you can control the money coming out only, and you can receive money. What's also interesting about Bitcoin is it's like very, not fixed supply, very, very deflationary though. As more Bitcoins are minted, it gets less and less inflation. And I think it stops around 21 million Bitcoin. And it's not pegged against anything, right? You can say Bitcoin today is $37,000, but it's not really, it doesn't matter. Like Bitcoin is itself. It's not pegged to any world currency. And as a result, if you have like US dollar getting printed as like crazy, Bitcoin actually is inversely correlated. So basically as a dollar value goes down, Bitcoin actually goes up. And what we're seeing right now is like hundreds of billions of dollars being acquired by financial institutions. Grayscale being a very prominent one. They own $20 billion of Bitcoin right now. A lot of other funds are buying into $100 million increments. But what's happening is there's like not much supply left of Bitcoin actually. And it's causing like an overcorrection of the kind of hedge against the dollar thesis. I think everyone agrees that it is a hedge against the dollar, but at some point it might be overcorrecting it. And then as the vaccines roll out and the dollar gets stronger, that thesis is going to get turned around, right? So that's at least my view on Bitcoin. And again, like if we have a third stimulus, we probably haven't even seen the top yet. Third stimulus would again further devalue the dollar and further give Bitcoin that hedge up. So like even the $50,000 range that you predicted a while ago, which I thought was a little bit high, even the $50,000 range of Bitcoin is like not out of the question at all right now. So just another summary for everyone else. Ethereum took that decentralized ledger idea. They added a programmable logic on top of that, so people can actually develop code on blockchain. So what you have is like decentralized code as well as currency, and people use the first use case is always currency because that's like the most you can like take financial applications and put value on it and then transfer it over the chain. But Ethereum in 2018 came up with the ICO concept. You can mint new tokens on top of Ethereum. And that became a huge fundraising vehicle in 2018, which ultimately resulted in a big bubble pop because there was not much utility. There was actually not much adoption coming from that. 2020 though has changed everything. By the way, just to give a reference, Ethereum is up 700% since last year, and Bitcoin is up 300% since last year. So that's just kind of reference of what's going on with the kind of divergence of Bitcoin and Ethereum. But by the way, Bitcoin and Ethereum always very tightly coupled. DeFi is short for decentralized finance. Basically, it's mimicking real life financial services on blockchain. And with Bitcoin, the main mimic of financial service there is just currency, right? It's a currency and it can be traded. Now with 2020, basically the decentralized finance focused on borrowing and lending first, so people could deposit money for interest rates and borrow for and paying an interest rate on top. And also we talked about the automated market makers, which was the liquidity, so people can trade stuff as well. Now, what we're seeing in 2021 are these new developments of other financial services. So you're starting to see like options trading, you're seeing insurance, you're seeing hedging, you even see hedge funds. Like you're in finance, that ecosystem is really covering a lot of the different ideas in finance. And basically all these things are being developed and represented on chain. So these are all financial services, decentralized on blockchain that you can use if you have a wallet. That's it.
So excuse me for being an old guy, but it sounds to me you guys are mimicking the existing system.
Yes, that is, I think most of the influence and the ideas come from existing services, but I've seen some creative things, like if you purchase Ethereum, for example, it might automatically execute a put option for you, all on chain, right? So that's just one idea that's very interesting, but it's not really common in practice in the real world. I think right now, things are very, very hard for people that don't know about all the new stuff that's coming in crypto. Over time, it will eventually become, the barriers of entry, again, will always get easier. So like right now you see PayPal, you can buy Bitcoin and Ethereum off PayPal. You will eventually see PayPal offer these same financial services that connect to these chains. There is another project called POLKADOT right now, which is very, very similar to where Ethereum was in 2017, 2018. POLKADOT has that ecosystem now. I think what is very important to understand is anybody can launch a coin, anybody can launch a blockchain project, but what really matters that we're seeing right now is that ecosystem. Do you have a service that can fulfill like on-chain transactions, that can bring wallets, that can read what's on the chain, but do you also have other services for like testing and for bringing apps online and all that stuff? So what I'm seeing now is like POLKADOT is actually starting to show that ecosystem exists, and it's really catching steam right now. A lot of the smaller startup projects in there are like starting to multiply. They were worth like $1 million. Now they're like 10 million, $20 million now, within the span of the last few months only. So right now it does seem like Ethereum and Bitcoin, they're kind of like, they're only up 100% in the last like 2 months, right? Like only up 100% is really crazy to think about. Whereas all these other projects are coming in and they're going up like 10x. And that's because like, okay, now we're like at the stock market, nowhere to go. Let's go to Bitcoin and Ethereum. Now we're in Bitcoin and Ethereum, nowhere to go. Let's go to what other potential stuff is happening. But like I said, as we discussed this whole hour, there is a ton of stuff happening in crypto. The two things that I would say are government actions, regulatory actions, or strengthening of the dollar. And those are the two things I would look out for if I was watching for price action changes.